Good afternoon, everybody. We are now live here. Thanks for joining me. Today is Wednesday, the 29th of January, and we are going to get started here. We've got a lot to talk about, obviously. We've got the Federal Reserve coming up here in just about 2 hours, and after the close, I think is even more important than the Fed is we've got a lot of earnings coming. So let's start out by just kind of going over the major ETFs here a little bit. We'll start out with the SPY, and we'll talk about, of course, the semiconductors, and everyone's interested in Nvidia, of course. But we'll talk about some of the other stocks that were hit hard 2 days ago after that DeepSeek news. And let's go ahead and get started here. So the S&P 500, as we know, last week bounced from the anchor off of the August low. We've had this massive rally that brought it to a new all-time high. And as we often see, and what I always warn people about is after a big rally, and then we get a breakout. That is, when the market is extended and we get a breakout, it often leads to profit taking. So on Friday, we saw just that. A little bit of profit taking took place, and then we had big news that nobody could have accounted for, and that's what really sent the market reeling on Monday. Now, that sell-off on Monday brought us right down to the anchor off of the year-to-date low. That low was the beginning of that big rally that we just reversed. So we came down perfectly to that anchor, and we've seen a rally right up into the declining 5-day moving average. So these are all the technical things that I always look at and talk about. What we were talking about when the market broke this downtrend previously was the fact that we didn't have a higher low. Well, now we have a higher low, and that higher low on the daily time frame occurred right at the anchor, that orange one from the election, right at the rising red 20-day moving average, blue 50-day moving average, and dark blue year-to-date anchor. So this is that year-to-date anchor on the 30-minute time frame. What I'm looking for the S&P 500 is exactly what's happening. I drew this in last night saying I think we're going to pull back down to the anchor from the high. That is, of course, an all-time high here as well. So we've pulled back and we've tested that right now. Let's just erase some of these things in here. And you can see that we've tested the anchor perfectly to that level. So we're getting a little bit of a bounce right now. And that's a tradable bounce if you're on a shorter term time frame, of course. We actually probed it twice. But the bottom line is ahead of the Fed, we've got very low volume, and we're seeing this, catalyst that a lot of people are looking for. I think most people are expecting no change from the Fed. And as mentioned, it's really more about the earnings this week and the digestion of the bigger macro news for the semiconductors. So let's talk about first the Nasdaq, because that was obviously impacted. And you can see that here on the daily time frame, we have the same thing. On the left, of course, is the daily time frame. And we saw that pattern that we've been talking about of lower highs and lower lows interrupted a big rally, and now we have a higher low. So this week's low is going to be very important for the next couple weeks, I think. If this market doesn't fall apart after the Fed, here's what I think could happen. Maybe we drop down into this level. That purple is the week-to-date anchor, and that also brings us to this blue anchor, which is the year-to-date anchor. So I think if we see some pullback, this is likely a place that we'll get a bounce from. It's certainly my level of interest on the downside to say if we see a quick pullback into there, then I'll be looking at a very short-term time frame and looking for evidence that we might then decide to bounce from there. If we get a bounce, I think it's likely we run probably up towards that 5-day moving average, and we might run through it, but instead I'd rather it kind of just continue to stair step higher. On the opposite side, if we come down and we break below and hold below the week-to-date anchor, that's that purple one, and then I think we're going to see round two of selling. I hope we see the first scenario, and that's what I think is most likely. But again, it's not the market doesn't care what I want. Last night I saw some comments about the stock twits was announcing that I would be doing this, and there were comments that Nvidia is going to this level. It doesn't matter because Bitcoin is going to 250,000 or whatever. Nobody knows the future. So what we do and what we use technical analysis for is to look at what I call levels of interest. This is a clear level of interest for the Nasdaq rather. I'm interested in that to say if this market pulls back down quickly into that level, that's where there's likely to be buyers. It doesn't mean I'm just going to stick a bid in there automatically. It means I'm going to watch it probably on a 1 minute chart, look for evidence the buyers are gaining control, buy the Qs, buy the triple T, triple Q, whatever it might be, or buy, some of these stocks. But I'll be looking at that and saying, can I manage risk in that zone? If I can buy let's just say the Qs at 516.77 and set a stop at 516.64 because that was the shakeout low, then I will get involved in that and know exactly what my risk is. But the key is I don't know the future. Nobody does. So I want to know the key levels where we might see a shift in the supply and demand, and then can I manage risk in that area? That's the way a professional looks at the market. A professional doesn't look at the market and say, Fed's going to do this, therefore the market's going back to new all-time highs and it'll be 550 by the end of the week. That's the talk of an amateur. And I'm not calling anyone out on that. That's not my goal. My goal is to try to help you find the pockets of sanity in a pretty volatile market. To me, this is where a pocket of sanity might develop and that we can find an edge and manage our risk against rather than just making shit up, basically, hoping for the best and thinking that our opinion matters, because it doesn't. Maybe once in a while you get these things right and, it does exactly what you want it to do. And that's great. It's great to have a thesis and have it work out. Are the odds in your favor? Russell 2000, I think, is dead money. It's kind of pinching between the anchor from the election and the year-to-date anchor, but it needs to tighten up before it's really actionable. Semiconductors have pulled back really strong. Now, this group, a lot of people were looking at this and saying it was a breakout. And I warned over here that just like the S&P, that when we see a breakout from an extended level, we need to at least retest that breakout level and then see if it would hold. Instead, what did we see? We saw this pattern here of higher highs and higher lows interrupted. We saw a lower high and then a lower low right here. That was last Friday. That was your cue to take profits. No one knew this was going to gap lower like this, but what we've seen so far is the anchor from that event. And we anchor there because, one, it was the beginning of the week, and I always anchor to the beginning of the week. But if this had occurred on a Tuesday and we saw this big gap lower, we want to measure we want to measure what's happening from that point. The sell-off ensued. Then we've got the buyers trying to regain control right where they're supposed to. And these drawings I drew in last night for subscribers, and that's something I do every single night on Twitter for $10 a month. So this was what I thought was the most likely scenario, that we're going to pull back down towards the week-to-date anchor, and then we have the potential to rally higher. Where would we rally to? Maybe to the anchor from the high first, and then pause, see if the market accepts those levels, and then continue up to the year-to-date anchor. And if it continues up to the year-to-date anchor, that's also where we're going to see this 5-day moving average meeting. So maybe we've got to move up towards 250. And where can we measure risk against? Well, on the shorter term time frame, here's a 5-minute chart. We can see that this is the 2-day and the 3-day VWAP. Blue is the 2-day, that is from the beginning of the day yesterday, and this is from that gap lower. So now we've seen the buyers have converged right there. If I wasn't talking right now, when this started, I would have absolutely just bought right here with a stop below there. That's the thing I've been talking about since day one here on this show. If you go back to that very first session, we spoke, I believe, about, it might have been Google at that time. But this to me is a low risk, high probability setup. Now, what I would be looking for is initially a test of today's volume weighted average price. So because that volume weighted average price is right here, and because we have the Fed coming up, I would have only traded it with a small risk size. Meaning, if my normal risk is $1,000, I might have risked 250 or something in there and sized it appropriately. But this is where I would think it has the potential to go. I would likely sell some there and then see if, hey, maybe if it continues to go like this, and then I would be stopped out over here. But the bottom line is, for the semiconductors, right now they're doing what they're supposed to do, and that is they're finding buyers where they were supposed to. Very similar to what I want to see if the Nasdaq sees a quick shakeout right down into this zone. So let's talk about the biggest name on the block in the semiconductors, and that, of course, is Nvidia. And Nvidia lately has been just super volatile. It really hasn't done a whole lot in the last 3, 4 months. It's been in this bigger range in a primary uptrend, of course, because when we look at the weekly time frame, there's no denying we're still in an uptrend. The question is this uptrend fresh? Early in the uptrend, we tend to get a test of, the 20 week, the 30 week, and then the 40 week, 30 week, 30 week, and then the 40 week moving average, 200 day. So it's maturing is the way I look at it. When you look at this weekly chart, we've got this has been our big level, and that was prior resistance, held as support. Now we're stuck below that. I really look at Nvidia right now as sure it could recover, but I don't think it is likely to see a quick recovery like we saw with these sharp sell-offs that immediately rallied because we're below this prior important level. Support broken tends to act as resistance. Doesn't mean it's going to just go up to there and then fall apart. But you think of all the people that own the shares of Nvidia up here who might be saying, hey, maybe there's something to this DeepSeek news, so I've got to get out of some. Where do they do that? Up near their break even in this zone. So support broken tends to act as resistance. I don't think you're going to see Nvidia do a quick and massive recovery the way we're used to. It's right on the 200-day moving average. That's been an important level for the market. Not since way back here, since 2023, since we've tested that. So it's trying to stabilize there. Had you purchased the first test of it at 122.50, that means you purchased right here. So the first test at the 200-day moving average, you had to sit with the stock. Well, it went down 6 points. It went down to 116 and a quarter. That's a tough sell in my book to buy just because it touches the 200-day moving average. Instead, let it settle down. Let cooler heads prevail. So what we see now is happening in Nvidia is it's trying to find support at the anchor from the event. The event is what saw that huge structural shift in supply and demand and cause the sellers to gain control. Some people are saying, well, it's because, some institutions are trying to create an opportunity to get cheap shares. That doesn't happen on this type of volume. That's not a manipulation. That's pure panic selling from big institutions who are saying something shifted fundamentally. We need to get out and lock our gains in on at least partial position. Let's not wait around. And they can always reestablish their position. Is this evidence that they are reestablishing their position here? This is the anchor from that event. That measures who's in control since that event happened. We know a lot of people lost money that day. That's not the point. But since that event got absorbed into the market, what is the supply and demand? Well, the average price the stock is traded at is about 122.60. It's at 122.73. So the buyers are just barely in control. Short sellers are at about break even. Buyers are at about break even. But this had been resistance, and now it's maybe acting as support. If it can act as support and rally, well, this, buying strength from here would be a logical place to buy with a stop underneath this. This is the low. This is a higher low. This is a high. This is a higher high. So if this is our higher low, then we want to then look for the stock not to buy a higher high, but instead to buy some as it's moving away from here with a stop under there. But we have to consider the odds aren't as great because we have a declining 5-day moving average. So maybe it rallies up towards that level, and that would be a nice trade. But the bottom line is we have to use these if-then scenarios and say, if we buy it in this zone because the buyers are in fact gaining control at this important level, if I want to buy in here, what changes that? Well, if it made a lower low, then I would be out. So that makes for a good low risk entry. Is it high probability? With a declining 5-day moving average, you have to take some points off. With a prior bigger band of support in here, might act as resistance. You have to take some points off. So to me, it's all about not just buying Nvidia and making a stand and going all in because it's the big bad semiconductor, but to say, does it make sense from a price standpoint? And then when we add in the risk factors like the earnings Well, they're not due till February 26th, so that's not an issue. We don't have to worry about earnings from Nvidia. What about the Fed? That's likely to shake things up a little bit here. So setting a stop right there, you might get shaken out. In other words, this might be the best place to buy the stock right now. But when the Fed comes out, you might see something quick like this happen, and then it recovers. And that's why you have to say, do I want to buy now or wait till after the Fed? Those are your questions to ask yourself. What is your risk tolerance? How do you look at the market? That's what we're most interested in. So I'm trying to look where the chat was. Oh, there it is. Okay. So I've got some symbols here, a lot of them. So let's take a look at a couple of these. Meta, for instance, they report today after the close. The stock is in an uptrend. It's at an all-time high. Is this a case of buy the rumor, sell the news? I would say, if you're going to hold in front of earnings, what good is a stop? If you're going to, we've got a pattern right now of higher highs and higher lows with a rising 5-day moving average. So going into it, it's innocent until proven guilty. I would say, news and surprises tend to follow the direction of the trend. It's at an all-time high. But if it disappoints, it could get hit maybe down to the year-to-date anchor. If it got hit down to there, that to me would be your level of interest where you say, wait a minute, this is an overreaction. Let's look at the shorter-term time frame to see if maybe I can pick up some cheap shares in there. Alibaba, I think you're late on this one now. My friend Jake Wojcicki has just made a killing in this one. I personally don't buy Chinese stocks, so I haven't touched it. I'm not going to touch it. I don't like the way they trade based on the gaps every single day that make the risk too hard to manage. And it's basically been in a downtrend. Doesn't mean you can't make money in it. I see people making money in it. But for me, you're kind of chasing it right now. It's just rallied 25% in the last 2 weeks. Now's not the time, I don't think, to be looking to be a buyer. Maybe it shakes out down to the week to date anchor, and then you start to look at it and say, okay, if it does this in here, and then the buyers regain control after a pullback, you can buy, let's say, right here with a stop under there. That's the way you want to look at it. But right now, it's below the daily volume weighted average price for today. So we've seen that act as a battleground. Now the sellers are in control for today. I would keep an eye, if I was a day trader, I'd look at the 2-day VWAP and say, hey, is it going to bounce from there back up to the daily VWAP? And then maybe it starts to break down a little bit further. But right now, I think that, and I'm a swing trader, so I talk from a swing trader's perspective, is that I don't really see that it's time to buy this stock. And unfortunately, when I get questions on this show, a lot of times they're with stocks like this, stocks that have already had big runs. And my answer is generally going to be pretty much the same for these stocks that have had these big runs, is that, it's too late to get involved from a swing trade perspective on a short-term time frame. The higher it goes, the bigger the risk of a greater pullback are. So you want to trade smaller share size. And if you're going to get involved, you have to look at it on these shorter-term time frames and say, just today we had this high and then we had this low. We had a higher high and a higher low. We had this high and then we had this low. We had this high, so we had a lower high, and then we had a lower low, and it broke the VWAP. So the sellers are in control for today. It's up on the day, but the sellers are in control. I know the sellers are in control because the average price the stock traded at is right up here at the VWAP of whatever price this is. Let's take a look together. The average price it's traded at is about 99 today. The average buyer from today is down $1. The average short seller is feeling good. They're up by $1. So, as it rallies back up to that level, are the buyers going to regain control? If so, and you want to get involved on the long side, buy here with a stop under there. If instead it starts to do this, well, then maybe you short on the way down with a stop there. It's all about, again, are you early to this trade? Absolutely not. It's just rallied 25% in 2 weeks. So let's take a look at AMD. AMD is getting some news, and people just love this stock. I don't know why they love this stock, truthfully, because, I think we spoke about it last week as well. Just look at the daily chart. This blue moving average is a 20-day moving average. It's declining. The 50-day moving average is declining. That's the green line. This black line is the 200-day moving average. It's declining. When you just take a very basic look at the stock, you have to say only one thing. This is a stock in a downtrend. It's making a pattern of lower highs and lower lows. It might be, if that's your game is for the counter trend bounce trades, then fine. Those, that's not what I do. I'd rather short it on the way down as it rolls over after one of these. I'd rather be a short seller right here because the trend is lower. To me, it's guilty till proven innocent. It's in this downtrend. It is, we've spoke about this anchor before. So, it's in a downtrend. And typically, if they don't scare you out, they'll wear you out. You'll have time to make money on the long side in here. But the fascination with this stock, I don't understand. It's been a money loser for well over a year. Well, just about a year, really. So it's been in a downtrend. Quit trying to find a bottom in something that's, going lower. SMCI, I still think this one, I said this a lot in the last couple of weeks. I think it's probably heading back towards that 20 level. The problem is that it's so difficult to short these things because you get these gaps. Now, I was looking for it to break down over here. I was looking for, on this day, I was looking for it to rally up a little bit and then short it here with a stop right there. And instead it rallied. So I didn't take any trade in it. And then I was looking at it thinking, well, maybe it can do something like this and then it'll break down. Instead it gapped lower. Yesterday was actually a perfect example of an entry of what I look for, which is when it breaks down on day one. On day two, it gaps up and hits this 2-day VWAP and then gets below the daily VWAP. That is your perfect short sale with a stop right there. For now, when I look at SMCI, let's take a look at the daily chart. I still see a stock that's in big trouble. If they didn't scare you out, they'll likely wear you out. And I think we're probably headed for another test of this, and it's going to take a lot of time. I look at this stock the way I look at, a lot of people talk about TMDX. And it's the same thing. It's another stock in a downtrend. It's getting a little bit of a bounce, but the trend is lower. So those aren't my types of stocks to trade. I see TGTX here, and that's a favorite of mine. That was probably the stock. It is the stock I made the most money in last year. And now it's showing a nice little run in here. Earnings are due February 26th. I look at it and say in the last 4 weeks, it's gone from 28 to 34, 6 points. That's about 22.5% or so. Can it continue? It has in the past. So maybe it's going to continue this rally in here. Let's look at a 15-minute time frame. It's making higher highs and higher lows. So I think that if you own it, you've got to say, where does your stop go? Where do you set your stop? Which of these higher lows? Because the more extended it gets in here, the more likely it is, I think. So let's look at a daily and 30-minute together. I think it's more likely that it's going to give us a better opportunity here sometime coming up. I would want to buy it next week if it does something like this, maybe even towards the end of this week. Right now, it's getting a little bit extended. It's had a very nice run, but this pattern is very similar to what this Nasdaq showed. We don't have a higher low yet, so I think that the buyers are officially back in control from a longer-term perspective. Right here, not as it breaks a higher high, but after it puts in a higher low and starts to rally again, that's where you want to be a buyer with your stop, maybe somewhere underneath this level. I've got TGTX on close watch. I think it's likely to be a good winner this year. It's got a nice looking weekly chart. It's got room to run, once it breaks past this level. I think you've got, the next push, so again, we pull back a little bit, make a push for this, and then I think you're going to see it continue to run this year. It's a good looking chart. So keep a close eye on it. And if you're in it, know where your stop goes. Where do you want to protect your gains? Let's see. I was going to talk also about the financials because this is really important here. Just as we spoke about the semiconductors and their pattern of higher highs and higher lows over here that were interrupted last week, the financials, I've been talking about these. If you look at my Friday videos or if you were listening last week here, you saw me talking about all this stuff. What is this? These are higher lows above a rising 5-day moving average. So I've been saying if you're long, raise your stop up under these successive higher lows. And I think now especially that the financial stocks just broke out to a new all-time high today. A lot of people look at that bullishly. Some people look at that and say, hey, it's breaking out. Let's get involved long. Well, the people who buy the breakout on a day like today, after the stock, after the market, the financials have run from 47 to 52. So they've rallied 12%, which is a big move for the financial stocks. They've rallied 12% uninterrupted. To buy up here and thinking that, it's going to 55, 60 in the next couple of weeks, it doesn't make sense to me on a risk reward. If you're going to buy it, you have to have your stop under here. Ideally, you're already long and you've been raising your stop up methodically underneath these higher lows and managing risk, because it would not surprise me one bit to see, like I said, what we saw in the semis and what we've seen also in the energy names. Comes down, makes a lower high, breaks this low. Now our pattern of higher highs and higher lows is interrupted on the intermediate term, and it probably pulls back down towards that 50 level. And then you want to be a buyer for a low risk buy somewhere over here next week. Up here, you're late. Doesn't mean you can't make money, but you're clearly late. Just like I said with the semiconductors and what we're seeing currently in the energy names. We saw the energy names have this big rally, and now we're pulling back. We've got this pattern here. Same thing. Lower highs and lower lows all throughout here. We made a lower high this morning, it looks like. Now, in order for the energy names, they're at a level of interest. They're at last year's anchor. That's that thick blue black line. They're at the 20-day moving average. They've got the 50, the year-to-date anchor in here. We've got a lot of reasons to be interested, but if it does this, I still wouldn't be bullish. I would look for it to do this, and then as that 5-day moving average flattens out, and then we want to be a buyer over here when the buyers gain control with our stop underneath this. This would be the most recent relevant high or low. So we'd be looking at it saying, here's a high or high, but we need a higher low, and then we buy here with our stop under there, and then what do we look for? Well, we either get stopped out or it does something like this. And as it makes this high, we raise our stop under here. As it made this high right here, our stop goes there, and repeat that process over and over. It pulls back. Is it going to stop us out, or is it going to pull back and then run again, make a higher high? If it does that, then you set your stop under there. It's the same process over and over again on all these different time frames. So here we are at the end of it. Let me take a look. I see there's one symbol I've never heard of, SCPH. It's a small pharmaceutical. So I look at it from a weekly time frame first, and I look at it and say, here's a stock that just looks like garbage. No offense to the person who's asking me about it, because I don't see a name. I've just fed the tickers here in the chat. But we've got a very clear pattern. We've got a declining 50, 100, 150, 200-day moving average. They are all declining. It's been making lower highs and lower lows. I don't understand why someone would be interested in this unless you know something about the company itself. It's a broken stock. It's in a downtrend. The sellers are in control on every single time frame that you look at. Look at a monthly chart of this thing. It's approaching new all-time lows in here. There's just nothing to be bullish about. Unless, again, maybe you know something about their fundamentals and they're due to, present information about their drug here next week. Well, then, that's a different story. But technically, it's just broken. I would say stay away from it. Let's talk lastly about Tesla, because they report after the close tonight. And here's where Tesla looks like to me ahead of earnings, is that we've got the stock still, we've been seeing it holding the anchor from the election over and over again. So this is an important level. If it breaks down and gets stuck below that, then you're going to see deeper profit taking in Tesla. Right now, today, it's below a declining 5-day moving average. If the stock surprises on the upside and runs up, I would be aware of this level right here, the anchor from the high. So look for 417-ish, 418, that if it runs up to 418, it might continue to move through there. But if it starts to stall out near 417, 418, it might be a good time to say readjust, look for the pullback, find buyers at the 5-day moving average, and then buy the next round up. But right now, it's got the big catalyst coming, so it's difficult from with that perspective. But be aware of 417, 418 on the upside. And we'll do this again next week, same time, right here on StockTwits and YouTube. So have a good day and good luck with your trading around the Fed. Don't be in a hurry to do anything. Let things settle down a little bit unless you are a super performer day trader. Most people should probably sit on the sidelines and observe. So thanks again. Have a good day, everybody.